This is NDTV, and you're watching NDTV Profit.
Welcome back. You're with us here on Opening Fire. Markets, let's just put the Nifty back up. Take a quick look. Then I just want to take a quick look at Srinivasan. I'm saying in the beginning, okay, we're at the day's high, by the way, so that needs some pointing out. 60 points down yesterday by close, 50 points up. That's the market for you. But it's basically been ping pong. Last 3 weeks, we've had at least 3 of these round trips. From 59.50 to about 61.50, back to 59.50, back to 61.50 to 6,200, almost 6,200 kind of levels, and back again. 61.41 right now, so right in the middle as things stand. Bank Nifty is up about 1.25%, 10,551. Banks, of course, instrument of choice, whether you're bullish or bearish. I mean, they get bid up quite a bit, or they get hammered down quite a bit. Srinivasan is on your screen. It's down just 5%. In the pre-open, it was down about 20%. It started down about 15-16%, just down 5% or so. So as I was saying before markets open, just looking at the price, and just because the price at which Wilmer is coming into Srinivasan is below what the stock closed at yesterday, that would be an incorrect way of looking at it. The industry is regulated, and the fact that Wilmer is coming into the business here through the listed entity, through the India entity, should be seen as positive. They had the choice, of course. We can only assume they had the choice to go directly to the Brazilian entity where Srinivasan has a lot of capacity and not come through the Indian route, which is pretty heavily regulated. So stocks at about 21.35 right now. I'll get to more in just a bit as far as markets go. One sector which has just been sort of completely forgotten is the general insurance space. It began with a lot of promise, but it's sort of gotten knocked off because of regulatory changes, intense competition with too many players, and general, from a stock market point of view, apathy with the lack of listed options, meaningful listed options for that particular space. We haven't spoken about the space for a long time, so let's sort of understand what's happening in that space as we kickstart 2014. Let's look into fiscal 15, how our numbers going to change. New India Assurance Company Limited is a 100% government-owned general insurance company. It's got operations around the world. And according to the website of the company, it's got about 12,500 crores of global business. The Indian business touched about 10,000 crores in fiscal 13. I've got the management joining in from our Delhi studios, Mr. G. Srinivasan, CMD at New India Assurance Company Limited. Sir, thanks very much. Good morning. Great to have you with us here.
Good morning to you. Thank you very much.
So what's happening? And, growth has been good last couple of years for the sector. But I just want to understand how are return ratios, etc., going to look like as we get into the new year, into the new financial year?
General insurance is a field which is a lot of potential in this market. There's a lot of under-penetration in general insurance. The last 3 years, the industry has been growing at 20%. The current year, of course, there has been a slight slowdown. The industry is growing at around 14%. But looking to the next decade, there's a huge promise. The industry is going to grow at an average growth rate of around 16 to 18%. The industry will do 80,000 crores in the current financial, and we are looking at a 5 times growth in the next decade. So that way there's a lot of potential for the general insurance companies in this market. There are now 29 companies. Clearly there is space for more companies, and I really see a very good potential for general insurance players in this market.
One would imagine that cyclicality in the industry is very low, right? I mean, premiums have to be collected, so hence, it's not a lumpy business in that sense.
See, it's a good business in a sense. You get the premium well in advance. There's a legal requirement that premiums have to be paid in advance before the risk can be assumed by any insurer. But essentially, the policies are annual policies, unlike the life insurance policies, which are long-term contracts. But typically, we see customers sticking onto us. They renew their policies, except a few who don't renew the policies. So that way, even though they are annual policies, we see persistence at a very high level in the general insurance field.
Yeah. So I just want to ask you, you said that fiscal 14 has been slightly slow, but you see rates of growth picking up. So what's driving the optimism really? I mean, are there specific industry dynamics which have changed, which you expect will change?
See, if you look at the general insurance industry in this market, there are so many people who are not insured, and there are so many industries and SMEs and even individuals who are uninsured or underinsured. With the awareness about insurance going up, and also with disposable incomes going up, and also the need for insurance raising in this market, we really see a great future. I mean, if you look at the personal lines of business like health insurance or even automobile insurance, a part of it is
the penetration
mandatory.
level?
The penetration level in India is only about 0.8% of GDP, whereas you look at some of the peers, even in Asia, it's close to 2%. So clearly there's a huge job for the general insurers and a huge potential for all of us.
Yeah. No, you please continue, sir. I interrupted you there. You were sort of running us through some sub-segments, I guess.
I was saying, look at the personal lines of business. Today every individual, every family needs a health insurance, needs an auto insurance, needs a homeowner's insurance to cover his building contents. But if you really look at these sectors, the kind of penetration is really very low. So there's a lot of work to be done, and with awareness going up and people having money to spend on general insurance, I really see that this sector growing in a big way in the days to come. So the drivers for general insurance is going to be primarily personal lines of business and retail lines of business like health, auto and other personal lines. So these are the sectors which are going to grow because there's a huge need for it.
Yeah. No, I mean, generally from a market standpoint, I can tell you that the sector has sort of not received attention because A, there are no really pure play listed entities.
I mean, at this point of time, there are
which people can participate into. The business is perceived to be a little difficult to understand. I guess, it's chicken and egg.
Prashant, you are right in a sense because there are no listed companies in the general insurance space in this market. But the regulator has come out with clear-cut regulations how to list general insurance companies in this market. So you will see probably in a couple of years a few companies hitting the market and listing themselves on the exchanges. But I also take your point that this business is not well understood by others. It's a kind of a different insurance. It's not an investment-oriented insurance. It's more a risk management kind of an insurance. So not many people understand it. So the challenge before the industry, which all of us have taken it very seriously, is how to create an awareness about the industry, how to create an awareness about the need for risk management insurance products like fire insurance or marine insurance or automobile insurance. Clearly, some more job needs to be done, but then the profile of the industry is going up. As we are growing, today we are at about 80,000 crores in the current financial year. I'm really seeing in the next 10 to 15 years, maybe general insurance will be bigger than life insurance, which is the case in many of the developed markets of the world.
Right. So how much, so let's just understand very simply put, if you can very simply tell us the economics of the business. What you generate is what is called float, right?
Yeah,
you collect premiums before you pay out claims.
Absolutely. We collect premiums on day one when we issue a policy, and then when the losses take place which are covered in the policy, then we pay claims. So the way economics works out for this sector is, the difference between premium and claims and the cost of managing the premium is essentially, and the procurement cost we pay to the intermediaries is essentially the profit, which we call as underwriting profit. But the money we generate is also invested. That way the general insurance players are also significant investors in the market. We invest in equities, we invest in debt funds. So that way we are major players in the capital market of the country. So we generate investment income. So that also adds to our bottom line. So that's how the bottom line of the industry is generated.
So how much, in the Indian context, how much float do you sort of collect?
See, for example, look at...
net worth of 100 rupees, how much float do you collect?
Look at New India Assurance. Today we have an investment base of something around 35,000 crores. Now, every year we generate additional funds of 2,500 to 3,000 crores, which can be invested into the market. So that's the additional funds a company like New India generates. So if you look at the whole industry, maybe something around 15,000 crores could be what all the general insurers could create, including the General Insurance Corporation of India, which is available for being invested into the market.
So till a few years back, the sector was making losses, right? I think that's turned around now.
See, the sector,
I just want to understand, what's the future going to look like? Of course, rates of growth and return on equity, etc. You told us, but in terms of actual profits.
See, the sector has two kinds of profitability. One is what is called as the underwriting profitability, which is basically the difference between premium and claims and expenses of management and procurement cost. That's an area where the industry is challenged at this point of time. Especially primarily because of the auto line of business, the motor third-party line of business, which is actually where the claims are more than the premium. The premium is administered by the regulator. So we have been talking to the regulator to give a correct premium rate so that this sector doesn't make losses. But this is improving, so the industry will reach an underwriting profit situation probably in the next 2 to 3 years. But look at the other side, which is the investment profit, investment income. The sector really makes a decent investment income. So if you look at the overall profitability of the sector, the general insurance sector is doing well. It's making decent profits, and I really see a bright future. This will only improve and increase in the days to come.
Good talking to you, sir. Brief conversation today, but appreciate that you could come down. I hope we can have more of these chats. And
thank you.
It's a space which, of course, the big driver is lack of penetration, as you began by saying. That's the starting point. And there's much more to talk about. Thanks very much, sir.
Thank you very much. I appreciate it. Thank you.
Okay, Sri Renuka Sugars and Wilmer struck a deal yesterday. I've got the management at Sri Renuka joining us right now on the phone line. Mr. Narendra Murkumbi is managing director at the company on a phone line. So thanks very much for joining in. Good morning.